Well, good evening. I think we're done with the Midwest heat wave, but I'm still feeling it. And I know about what happened in the stock market on Friday, and we'll glance over it. But during these times, that's why we try to look at companies that have been stable. This is why I always call out during a live when a company's only been paying dividends for under 10 years. Stable. This is why I always call out during a live when a company's only been paying dividends for under 10 years. When we hit hard economic times like this, that's why I always announce how long a company's been paying dividends, because when we're about to go through something, it really can make a difference between a stock continuing to perform or not. We've had a lot of surprising things happen. First of all, we have three dividend kings: 3M, Leggett & Pratt, and Walgreens. Walgreens completely stopped paying dividends after 47 years of paying dividends. So they were a dividend king dethroned. Then we have Leggett & Pratt that reduced their dividends significantly by over 50%. And we have 3M that is entering into the healthcare arena, and they also, because of their financial statements, reduced their dividends as well. So we had a whole host of crazy things happen last week. First, we have the Trump tariff drama that has continued, and I took some notes on it so I'd remember to talk to you about it. Now, Trump has signed this executive order implementing the reciprocal tariffs ranging from 10 to 41% on various countries. So things that got crazy on the stock market last week because of the updates made to the tariff laws, and into this week it tried to bounce back and it went up 500 points this week. But Trump, maybe that was a Freudian slip. I have no political affiliation with any party whatsoever. I'm disappointed in the both of them. But Trump said that the new semiconductor tariffs and the pharmaceutical tariffs have not been decided yet. Those pharmaceutical tariffs could reach up to 250% and could really tank some of the pharmaceutical stock. So we have more stock market news coming. But the one thing that we also have to look for is the economic report, which again is coming up in September. Hi, D. Lynn. How are you doing? It's so good to see you in here. I just want to tell everybody to hold on, because even though there are tough times, we've looked at enough companies during lives before where the stock dips a little bit and a lot of people panic sell. And then after the dip and the market rebalances itself, the stock soars. So we'll look at examples of that tonight in companies, because it's happened before. It's getting ready to happen again. So we may have a chance coming up to get some pharmaceutical stock really super cheap coming up. Companies that we wanted to get into but we could not afford. And so seasoned dividend investors are looking at these bad economic reports and hard times as buying opportunities, being able to get in on stock that was hundreds of dollars that's decreasing tremendously. They're buying in real low because these companies have had a history of making it out of these situations and rising back up. So that's how I'm choosing to look at this, as a buying opportunity. Now, the stock market did rebound yesterday, and it went up 585 points. So the NASDAQ was up only 1.95%, but it's still the best session that the NASDAQ has had since May. So I want to talk to you guys about some major earning highlights despite what's going on in the world. So Starbucks is coming up for a dividend. We're going to take a look at that. And the reason why is because some people stay in Starbucks, some people just scrape that dividend, and the choice is yours. If you decide to scrape the dividend, you'll get paid a few cents, and the price always goes up after it pays the dividend. So you wait a little bit for that price to go up, and you'll earn a little bit on the price and the dividend. But the dividend is coming up August the 15th. So Starbucks is currently priced at $90.20 a share. It's up 42 cents as of the end of trading day today. The dividend yield on this is 2.71%. However, every year you hold on to your Starbucks stock, you add 7% to that 2.71%. So when you sell back your stock for every year you held it, you should be getting back 7% per year, plus that dividend of 2.71% that's paid to you every 3 months. So Starbucks has reliably been paying dividends for 15 years. They've been through all kinds of things: boycotts, lawsuits, employee labor disputes, and they've just kept on keeping on, and they've started to become a worldwide name despite that. So they paid dividends reliably for 15 years, and right now they're paying 61 cents every 3 months on that $90 per share. But again, I want to tell you, they've reliably paid dividends for the past 15 years. And every year you hold the dividend, we'll take a look at the price history to back this up. Look at how low it started out. Imagine investing in Starbucks in 1992 when it was just a penny stock at 57 cents a share. So when it started to really about to take off and make money, it was October the 10th of 2006 when it was $19 a share. Then all of a sudden that $19 went up in 2016 to $59 per share, even to have bought it back then. Most of us were working that I talked to. Most of us were thriving. Did you buy Starbucks stock during that year? If you did, it's worth, I told you to add 7% per year, but right now it's worth $40 more than what it was in 2016. So you see the return on the investment plus the dividend yield. So what happened was Starbucks was, let me move my big head out the way and show you. So Starbucks was at its peak in 2021 when it was $113 per share. Then a bunch of people sold out, went down to $97 per share. Then it struggled its way back up to 108. Thank you for the hearts and likes. And a bunch of people sold out again, went down to 79. Then it went up to in 2025 to 95.72. Now, with everything, it has not quite bounced back from the Palestine boycotts and the other things, but I do still invest and I support my local Starbucks because I know most of the employees there and they live in my community. They work hard to take care of their family. So that's why I am still a Starbucks investor, because I'm thinking locally, not globally with it. I actually know people there that need their jobs to take care of their family. So I'm still a pretty good investor in there. But right now it's at $90.20. They're getting ready to pay that 61 cent dividend coming up. So I expect for someone that's a newbie to be able to scrape that dividend, wait about a month or so for it to be even Steven or better on the price. But usually it's been better on the price. So if you're going to scrape it and sell it back within a month, of buying it after that dividend is paid and you made sure you're paid, typically on average people, get that little few cents extra profit, $1 or less. Basically, it's been anywhere from 57 cents to $1. That's if you're just buying it and scraping it. You're doing better than the bank on $90.20. Most people don't get paid anything from the bank on $90.20. But if you want to hold it, then you're expecting that 2.7% yield plus that 7% in price increase per year that you'll sell it back at. Keeping in mind the example of if you bought this even in 2015 at $61.34, that investment is now worth $90.20. So you can kind of calculate that price has gone up. You got the profit and the dividend yield on the Starbucks. So we're going to take a look at what's going on else here, and I'm going to look in comments. Comments are open if you have questions about ticker symbols. I know someone messaged me that McDonald's stock was too expensive, and I just want to welcome you all into our learning tonight, and I'm hoping that we get caught up. I feel like I've gone through hell because I've had several days. You guys haven't seen me on in a few days because I had several days without air conditioning and the heat index was 91 degrees. And then internet and mobile failures in my area at the same time. So it was really a bad time. And these were area-wide issues, and it just makes me think, like, people know how to trap people in their area in a disaster. And it wasn't really that big of a disaster, but I think that the utility companies were using the excess heat as an excuse to just mess with us. And they certainly were. I definitely have been through the ringer. I don't know about anyone else that has been in hot weather. I've had some people message me. So Ben asked, the market always goes up over time unless you're INTL, international, Ben. Yeah, the market, we look at each company as an individual, okay? Because we have 3 dividend kings that are going bye-bye after 47 years of reliable payouts. And they are American-based. So this economy, we don't know what's going to happen. We don't know what's going to happen if those tariffs go up to 250% for the pharmaceutical companies. But over time, you're right, Ben. The market does come back. We just wait it out. Some analysts jokingly say we wait it out every 4 years, hint, hint. So, we don't know what's going to happen. I meant INTC, my bad. No, Ben, that's fine. I got you. And if you want us to look at INTC, let me know, Ben. I appreciate it. And I'm going up through comments to just make sure. And I want to tell you the comments are open for ticker symbols or any questions that you have. But we have one person that's on the Zoom that said, hey, McDonald's is too expensive for me. Well, let's take a look at what that means, okay? Because McDonald's is at $2.98, or as they said, $300, which, pretty close to being $300. But let's take you through the history of McDonald's. McDonald's started off, okay, as a regular common stock at 70 cents a share in 1971. So that's the year of my birth, but my parents never gifted me the stock. I wish they did. But anyway, moving on. It started at its peak in 1999 when it was at $40 per share, okay? So it's gone all the way up, getting my big head out of the way. See, regardless of the economy, COVID, the Enron crisis, everything else, it still kept going on up. And here we are at $298.77. So the person said that this is too much. Not if you think of it as an investment. Because let me explain something to you. The dividend yield on McDonald's is 2.37 cents per year. Okay? For the past 48 years, they have increased their dividends. Okay? The last time they increased their dividend was September of 2024, when it went up by 4%. Okay, now the dividend growth is at 5%. What does that mean? Every year you own this stock, not only do you get the 2.37%, which is $1.67 every 3 months. This company pays you on that $298.77. But when you're getting ready to sell it after owning it, year by year, let's pretend you own this stock for 3 years. When you cash that out, okay, you should have a dividend growth now of 5.99% plus that 2.37 dividend yield. So the 2.37 is paid to you by the year, but when you cash out, you should see that price appreciation. So 300 is not too much if you're making the extra 6% on it, because the bank, there is no bank or CD that's going to pay you that. So there have been investors that I know that have relied upon McDonald's investing for decades. I personally have been a McDonald's investor for 25 years. So I know the price appreciation in the stock. When I started out younger Every year I would work up for I would buy it fractionally, break down the cost per month, and I'd own 1 share per year. Okay, but when I was able to buy more shares after I grew up and started working more, then it would average approximately 10 to 12 shares per year over 25 years. So, you can do it. Little by little, you can do it. Even if you take $1 and fractionally invest in McDonald's, it's better than buying fries, or get your free fries on Friday and put $1 into the stock, is the other thing that I'd recommend that you do. And I just want to remind you again that comments are open. There are so many things I wanted to remind you guys about. Some of the parents that are in my live have gotten me on OutSchool to teach their teens. We have $3 a week on a Saturday class coming up on OutSchool for teens age 13 to 18 to learn dividend investing. And I have that information posted in my Patreon if you have a teen that's interested in learning dividend investing. Now, if you're an adult that doesn't know how the heck to dividend invest, we have the free training coming up as of Friday. There'll be 5 weeks, self-paced. You could watch it at home on your own time, and it's free. All you have to do is enroll in my profile information, and you'll get it in time. And it's free. All you have to do is enroll in my profile information, and you'll get it free in your email. So if you don't know what you're doing, I'll tell you. Plus, I've been posting weekly and updates on the stock market every three times a week, and much more detailed reports for our growth tier, which is also explained on the TikTok and on the Patreon. So that's what my moderator wanted me to tell you about. But I wanted to explain to you that McDonald's is totally an affordable investment. And I'm going to be going through all the food franchises this week that are paying dividends. I'll review Pepsi and Coke and tell you why it's working out well for people. And a lot of people choose the food sector because the economy right now, they were heavily invested in tech stock. We don't know what's going to happen with the semiconductor tariffs. They were heavily invested in pharmaceuticals and healthcare. Again, we don't know what's going to happen with those tariffs because the tariffs are strategized for more with all the pharmaceutical lawsuits and everything coming up. They're starting to look at medications that are made in foreign countries, and when they analyze them here, like even in the case of levothyroxine, which is for the thyroid, the dosage is underdosed. It's not the prescribed dose that the doctor wants you to take. So we have a lot of people with medication not working because the pharmaceutical companies abroad are cheating people on their milligrams and on their dosages. So I'm being told by analysts that I talk to and follow that the reason why the tariffs may be getting very high on the pharmaceutical companies, it's because it's targeted toward companies to find resources that are domestic in America, where there are tighter standards of measurement with the US FDA labs to make sure the ingredients are what they say they are on the label. By the way, that's one of the reasons why Walgreens has filed for bankruptcies, because they were dispensing not only incorrect medications, their sorting machines were dispensing medications that look the same but had different number stamps. So, for example, if you're on prednisone, you might get Lasix because those two medications look alike. And a patient doesn't always check their number stamps. Even though it's a white circular tablet, you're looking for a white circular tablet. So there are a lot of lawsuits settled out of court on that, on misfills. I mean, we could look at the news, but Walgreens just completely, I don't know, they're just getting rid of a lot of their stuff on clearance now, and they're having good sales on their over-the-counter, just trying to make their retail work while they're figuring things out and while they're waiting for this new private company to come in and take over. But they have stopped, as a dividend aristocrat, paying dividends. And we wanted to take a look at Palantir because despite everything going on here, Palantir hit $1 billion in quarterly revenue for the first time. It has had a 48% growth earning, And they beat the expectations of the analysts by a little bit by 16 cents. The analysts were expecting 14 cents, but it's pretty close. That's why we had to mention it. And the stock for Palantir has more than doubled this year, and it has reached a market cap of over $379 billion. So we're going to take a look at Palantir next on this. Let me type it in. I'm not good at typing today. Palantir I was trying to type in the ticker symbol PLTR. But Palantir is up it went up today based on the stock news of the earnings going up. So this was a nice day for trading. A lot of traders just whipped in this stock and started buying it like crazy when it opened. But at the end of the closing day, Palantir was up by $12.61. Now, this is a common stock. It does not pay dividends. It's driven solely on the price of the stock. So right now, the stock appears to be making money for people. But because of it really getting past, analysts only thought that this would be $131, and it's gone up to $173. So they're saying, whoa, wait, don't buy it, because we don't know if it's coming back down from here or not. But there are 10 analysts that believe that this is going to go up no higher than $200 this year total. So if it goes beyond 200, they believe it'll fall down to 200. But the analysts are saying if you don't own it, don't buy it right now. And if you own it, hold it, because it may be going up. So that's pretty much what I just wanted to update you on this. But as for the price history and how it's jumped, I want to take a look at this, because this started out as an IPO. Okay, it was over $5 IPO in 2020. So it's $9.49 per share. You hear that, Yield Max? This was in 2020. For those of you that are in Yield Max, watch these numbers, and this is what makes a company work. So all along, investors are just making a little bit and taking a little bit down. But right here at October of 2024, when all the Yield Max started, this stock was $42 per share. Now look at this. From $42, it went up to $173.27. So this stock made more money than a Yield Max. That's what I want to point out to you guys that are asking me about Yield Max all the time. And all the social media influencers, it's just ridiculous, because this stock made more money than it. So I just want to show you what a good company looks like, so you know. And don't buy into the hype, oh, the price is going down, but the NAV is stable, and I bought in when the price was going down. No, a proper company that a seasoned dividend investor invests in is low in the beginning, but it should always be going up. Okay, if there's an economic slump and it goes down, you can see if the company has stood the test of time, because here it is. Right here, February of 2025, it was $87 a share. A bunch of people sold out, okay? And it went down to $84 per share. People didn't panic sell. They kept buying it, and it went up to $173.27. This is the kind of results you want to see as a dividend investor. You want to have a company always going up, not going down at the end in price and losing money. You want it to continue to go up. So that's why I'm showing you Palantir, because if people had taken their Yield Max money and put it in Palantir, they'd be sitting a lot prettier right now if they took that same money they put into Yield Max and they bought Palantir around the same time, because they took off around the same time, but this company took off a lot further, and you would have been really happy today. No Yield Maxes today gained $12 at the end of the traded day. None of them, but Palantir did. So sorry to rub it in, but just want to show you what good dividend investing is. Now we're going to take a look at Microsoft next. Microsoft beat its expectations, okay? it went up by $3.65, and the analyst said, well, it's not going to go up higher than $3.37. So that made their revenue $76 billion opposed to the $73 billion expected. And they believe that it was because of the Azure revenue from their launch of Azure that exceeded $75 billion this fiscal year. It made Microsoft go up 34%. So we're going to look at Microsoft and see what's happening with it. Microsoft Corporation. So Microsoft is at $527.75, but don't be fooled. Well, let's go back through a quick history of it. In 1996, Microsoft was only 96 cents a share. It was a white paper stock. Okay? Then we go along until we hit about right here at the bottom of the angle in 2017. If any of us remember where we were in 2017, this was still affordable at $86 per share. Very affordable at that time. Then all of a sudden, it takes off to one peak, and it becomes $299 per share in 2022 when Yield Max started and then went down. A bunch of people cashed out when it reached $299. So those who didn't panic sell really did well. Those who cashed out and said bye-bye because there was a fear during that time of no updates. But there were updates. There were improvements to the product. But at $256, it's taken off to where it is today at $527 a share. So here we see another example of not panic selling when a stock goes down, and riding through. This company has proven that. So in terms of dividends, they're only paying a 0.63% dividend coming up here on August the 21st. Why? Because the stock has grown at least 11% per year conservatively. We're taking the conservative number. So they're paying that 0.63%, which is $3.32 per year on that 527. But when you get ready to cash out your Microsoft, after holding it for a year or longer, you should earn 11% per year on that stock price increasing for every year that you've held it, as we've seen from the chart history. So I hope I'm breaking this down and telling you that Microsoft has reliably paid dividends over 19 years. They have not announced any dividend failures or any missed dividends. It was a little bit down today at 7.89. But honestly, it didn't make an impact in the price because this stock has grown from being just $299 per share. Now, analysts say that this is an excellent price per share for it because they expect it to go up even higher over the next 52 weeks. They expect this stock to be $675 per share. What they think is going to happen is that it's going to hit $5.99 and go down and then go up to $6.75. So when it hits $5.99, a bunch of people sell. You have a choice not to panic sell because we've seen from the past history that if we just ride in and it goes up to that $6.75, that'll be that sweet spot for us this year, and it'll actually be a little bit more than 11% gain. But that's why we still have our eyes on Microsoft. Even though it lost money today, we're looking at this as a bargain price for buying into it because the stock is expected to go up. Now, I see some messages stored down here. And I do see some comments in here, so I'm just getting to them now. Videos by mistake asked about thoughts on AMD. So let me pin your question. AMD. Advanced Micro Devices. So Advanced Micro Devices is at 174.31. The analysts believe, 33 analysts have looked at this, 12 believe that it's going to be $210 in the next 52 weeks. And then the balance of that believe it's going to be right at 155. So it's at 174 now. So they're saying it's a good price to buy it at because it's going up. I want to see if so this is a common stock. There's no dividends on it. So the situation is on the forecast, it's an opportunity to earn approximately 20 or more bucks on this for this year, is what they're pretty much saying on the AMD. Can you talk about SoFi? Lunchbox asks about SoFi. So we're going to pin Lunchbox's comment and ask about and look up SoFi and see what's going on with them. And I get letters from them all the time. They actually, if it's the same SoFi that we're talking about, they sent me a card, a platinum card, and they want me to use it. I sent that right back because those interest rates on that card is ridiculous. But SoFi forecast right now, okay, they're $21.54 per share. 15 analysts have looked at it, and the needle is on caution buying it because they were expecting this at the highest to be $17.20 this year, and it's raised those expectations. So the analysts say that this may not go higher than $26, but at this particular price, there's not a whole lot of profit in it. So caution buying it if you don't own it. If you do own it, the yellow means to hold it. And let's see. So this is another non-dividend stock. It's a common stock, completely driven by price. So the forecast is saying there's only 5 more bucks to be made on this year. It is pretty much what they're saying. And let's see. What other questions? T. Daly says bought at 17. Good for you, T. Daly. I'm glad to hear that. Next, APLD. Did you want us to look at it, T. Daly, or are you just telling us APLD as to what you bought next? So while you're answering that, or if you answer that, we'll look at PLTY, which is a yield max, and Black Eye Joe looks at it. So it's currently at $74.08, and it's up $4.22 by the end of the trading day. This is an yield max that trades option income. The holdings that they have in it, that this yield max has 16 holdings of equity assets worth $616 million in assets. We always look at what they're holding. So they're holding in assets. We always look at what they're holding. So they're holding mainly treasury bills to back the cash option trading that's going on with this particular fund. So that's how they're trying to keep a secure, good-looking financial statement with it. So the dividends of what they're reporting on this, now they're saying that they're paying a 55% dividend on this. So they're paying $40 per year on the $74 per share currently. So the history of this fund has been, this fund has always tried to, even with the little increase in February, I'm going to move my head out of the way. In February of 2025, it had a little increase, then a bunch of to $90 per share, then it went back down, and it's constantly just traded sideways, a little down, sideways. Now it's a little up at $74.08. So typically this fund, when it gets ready to pay out a dividend, they pay a dividend every month. They last paid a dividend July the 17th. So the next dividend on this will be August. The 20th, I believe, of August is the next dividend on this. And this is the kind of fund that people have been getting in because historically they're investing in it for that 55% dividend because there is no dividend growth. Currently, since February 2025, the stock is pretty much traded sideways. So they're saying if you buy it and sell it back, there isn't going to be any profit in it according to the history. Now, today it was up by 422. So I will look at the dividend sales history into next week when more of the stock financial information is updated to see how many people sold after that dividend went up today, or if it went up, because the day before today it was down 23 cents. But they've always been trading to try to maintain it at around the same price, between $71 to $75. So that's pretty much what we could expect with the performance of this fund, to be around the same price. So it isn't a price. It isn't a price growth. It's more of it's an incentive to collect higher dividends and invest in an ETF that's based upon trading options. And it's for people that don't trade options themselves, and they're trusting the fund managers of this fund to trade the options for them. As a conservative dividend investor, anything above 13% carries a larger risk of losing money. So just as there's gains in this, there's also decreases, and that's where we watch the fund, we watch the price history to see what's going on with it. But it pretty much shows a history of remaining around that $71 to $75 point since, I guess, February of 2025, and a little bit prior to that. So thank you for the hearts on that. I appreciate it. And then Mel HV says, when yield max drops, it's terrible. It takes more money from you. Yeah, when it drops, that's the loss. Just like it pays the higher. That's why it pays the higher dividend yield, because when you win, you win, and when you lose, you lose. Okay. Let's see. How about UPS is what I'm seeing. I'm sorry about the silent pauses here. My moderator's just texting me some notes because we have other people on the Zoom and private lives simultaneous to this. So Beta says that stock analysis is solid. Yes, it is. It's a good solid thing to analyze, and this is filtered through Yahoo Finance as well. MKS about how about UPS? So let's take a look at UPS and see what's happening with UPS. Or what can Brown do for you? Shout out to Bob and Human Resources VP at UPS, who is in our private study group Dividend Live simultaneously watching. So he's waving, but he's on a different Zoom feed, but I'm just giving him a shout out. So UPS also was up by $1.76 by the end of today's trading day. It has reliably paid out dividends for 15 years, so they're offering 7.56% on the dividend yield, which is $6.56 per year on the $86.78 per share. So they break that down into 3-4 payments per year, and they last paid a dividend in May. They should be getting ready to pay one August 19th of $1.64 is what it looks like. So August 19th is going to be the next time on this. So here's the thing about UPS. They've been paying dividends for 15 years on this. That's 7.56. Why the high yield? Because over the history of every year someone has held this stock, they haven't been able to make more than 0.62% on the price growth. So they do the higher, usually when you see a higher dividend yield like this one, 7.56%, you expect a little bit of dividend growth on that price, on that $86.78. A little bit of dividend growth on that price, on that $86.78 that we see here. So they're saying it's only 0.62%. What are the forecasters saying on UPS? Well, they're predicting that it may go up to $112 in the next 52 weeks. If it surpasses $112, they could see it going up to $147. So right now they're saying that the $86.78 is an advantageous price to buying at because they think it's going to go up. There are 3 analysts that believe it's going to drop down to $75. So I also have to share that with you. There's always analysts that believe something's going to go down, so I have to share with you both. But the overall consensus is that the 86.78 is a good price to buy in at it currently. So Ultra Zombie says, I love SoFi, my third largest position. Good for you, Ultra Zombie. We love hearing. So Ultra Zombie says, I love SoFi, my third largest position. Good for you, Ultra Zombie. We love hearing what you like. How about ONDS, Slick Be Missing? Okay, let's pin that comment, Slick, and let's see what's going on. So ONDS is Ondas Holding, okay? They're at $3.07. So it's considered a penny stock because anything $5 and under is a penny stock. I don't make the rules. I'm just saying what it is. So when we look at this historically, even though the stock is up by 40 cents, which is a whole almost 15%, the stock is up by the end of the trading day today. Typically with a company that is $5 and under, when we invest in it, we look at we've done our penny stock lives before, and typically we look at 3 to 5 years for investing to make sure the company is making its benchmarks. So they're saying that currently only 2 analysts have looked at it and believe that the $3.07 is a strong buy because they believe that the stock is going to go up by another $1 to $4 this year. Is what they're saying on this particular stock. Now, because it's a penny stock, we also advise people to read into the prospectus, read into the calendar of what they're promising to make sure the stock price is going up by that time and the company is meeting its financial promises that it's making simultaneously to investors. Nicholas Sandoval asked about QBTS. Okay, let's take a look at QBTS and see what's going on. D-Wave Quantum. So QBTS is at $18.30 per share currently. So it's at $1.12 up at the end of the trading day. The analysts are saying on this, I'm just going to scroll up and then we'll look at the rest of the history. At this price, they're saying that it's a strong buy. Only 9 analysts have looked at it. So 7 believe it's a strong buy. 2 believe it's going to drop down to $12. But the other 7 of that 9 believe that it's going to go up to $20 from this point. And there is one extra one that believes that it could go up to $30 from this point. So they're saying that at this $18.30 price that it's currently at, they're saying it's a strong buy currently. Let's look at the price history on this stock, on Qantas. So we have Qantas over here in 2022 where it was at $10 per share, $12 per share. Okay, then it went all the way down because the company, I don't know why. I don't know why it went down, but it just shows in the history it went down to $2.42. And that's in 2022. So it's still down, okay, and right until we get up to here, 2024, it's at $2.89. Moving my big head out the way, okay? So then it goes up here in 2025, January 2025, to $9.55. Goes all the way down. Then it goes up again in March of 2025 to $4.63. Goes all the way down. Right here, more in April, it goes from $6.91 all the way to $16.56 a share. So something that they must have announced in April, May to make this go up and remain up there. Then it goes down a little bit, and then now they're at $18.30 in July. So it's done a lot of deep ups and downs, a lot of deep bends, ups and downs. So far, especially this year, it shows a history. Every time the stock has gained money, it has lost a bunch of money, and I'm confused as to whether or not people are going to hold on for the ride. This does not appear to be a dividend stock. It is a common stock. So at $18.30, and the forecast is saying it's just going to go up to $20, $30, There's the opportunity to make anywhere from $2 to $10 on this, according to 9 analysts. But there is a chance that there could be a loss all the way down to $12 if those 2 little analysts are right about this. So I hope I answered your question. If you buy anytime before August, you get the 55%. Are you talking about the yield max, Tank Esquire? Usually they publish, every company is different on that. When I read the prospectus, you actually have to read the prospectus to see what they pay, because some of the yield maxes don't pay you until 30 days after you invest, some of them after 60 days, some of them weekly, some of them right on the month. So there is a buy date or an EX dividend date that you have to get in before to be eligible for whatever the dividend date is, but it's different for every company that I've looked at. So you have to look directly at the one that you're interested in. Look at SCHG, please. Is it SCHG or SCHD? Let me see if there's an SCHG. So that's the Schwab U.S. Growth Capital that we're looking at here. That's $29.86, down 25. I also hold some Schwab funds, but let's kind of take a look at the history of this and see what's happening with it, because the stock price history, it lost money today, 25 cents, but the history of it has been the stock price has gone up. So this was an IPO in 2010 that was around $8 per share. Okay, getting my head out the way here. So we're right about here where a bunch of people sell it out at $12.35 per share. Then it goes up one mountain in 2022 to $19 per share. Goes down, bunch of people sell down to 14, and then from 14 it goes up to $28 per share. People hold on despite the decline down to 27, and they ride it up to 29. So it appears that every time it has lost money, it has gained back. So on the dividends on this, they're only paying a 0.38% dividend yield of 11 cents per year on the $29. Why? Because they're saying historically every year you hold this, every year you hold the stock, it has a 10% growth in price attached to it. So let's pretend you just held it for a year. It would be 10 plus 0.38. It's a 10.38% dividend yield on that $29.86. It is what they're pretty much reporting on this currently. UPS is a hard sell. Have you seen what's going on with them? Well, I have talked to Robert he's been a member of our dividend investing group for 20 years, and he's always telling us about UPS because he works for inside the company Human Resources. He didn't update me this week. He updated me last week, so my news on this may be old. But what I'll promise to do, Jasmine, YouTube, that's your name, I'm sorry. I hope I read your name correctly, is that I've got to talk to him in the morning and get an update, and I'll post it on my Patreon for you. So currently, when we just looked at UPS, though, we just looked at them, and regardless to whatever the news is or what's going on with them, they've remained a solid 7.56% on paying that dividend yield, because this is a stock that does not have dividend growth, only 0.62%. That's why they're paying the 7.56% yield. So that's the dividend investor perspective. But in terms of any extra news on them, he'll know, and I'll ask him about it. But they, pretty much the annual dividend on this is $6.56 per share, and they're getting ready to pay out another dividend in August. Is what they're doing on this. What does SoFi do? Well, according to me, which I haven't done a whole lot of research on SoFi, but they're involved in lending, financing, and credit. They're involved in a whole bunch of things, but that's the people that keep mailing me those cards that I don't use. SAH. QBTS, Nicholas asks about. QBTS. I looked at that. I'm sorry. I may be looking at old comments again. Look at Maine. I was waiting for somebody to ask me about Maine and how they're doing. Jay, I'll look at Maine. I was waiting for somebody to, because we have a lot of Maine investors in here, I know. So Main Street Corporation has been paying dividends for 4 years. So Maine is down currently to $63.66 per share. So it's about 53 cents at the end of the trading day. The day before they were up 24 cents. So what they're pretty much saying is that they're paying $4.20 a year, which is a 6.54% dividend we see on $63, and they've reliably paid out dividends every month for the past 4 years. They're getting ready to pay out they're announcing another dividend this Friday, which they'll be paying out as they do, and they don't look like they're going to miss it. So let's take a look at the history of the stock, because what they're saying is for every year you hold it, you should have that 4% to add to that 6%. It's a 4% growth. So if we take a look at Maine from the beginning here, they were at $13.98 per share when they were an IPO. So they've gone up and sideways, and we'll take it up to here, where in 2019 they were at $43.51 per share, and a bunch of people sold at that price. Then it went down to $30.25. Those who didn't panic sell, good job. So the stock continues to go up and sideways and up. So it goes up to March to $58 per share. Then a bunch of people panic sell, goes down to $54. Those who did not panic sell, good job, because it went up from $54 to $63.66. So what they're saying is that for every year you hold the stock, you're going to earn 4% on that price, as well as the dividends that they pay every month. Is pretty much how Maine works, Jay. So I hope I answered your question on Maine. Robinhood, Desmond. Now, Robinhood just launched Hood June the 30th of this year. So it's been kind of iffy with what's going on with it, but we'll take a look at an update on it. So it's currently down 91 cents, down to 105.46 per share. Okay. They created this as a way to earn a little bit of dividends on Robinhood stock. So you invest in the Robinhood platform. Let's see what it's like to invest in Robinhood as a whole. So when this started out as an idea or concept in 2021, it was $46.80 per share. It went down because it really wasn't paying dividends. They've only recently started paying dividends on this as of June. So here we are in February, where they announced, well, we might pay dividends on this. Well, a bunch of people cash out when it reaches $49, so it goes down. Then in April, they confirm, well, we're opening Hood, and we're going to start paying dividends, and we'll launch it June the 30th. So from April of 2025, it goes up from $35 really quick all the way to $105.46 is what happened to Hood. So that's where it is, and it's just starting to do some of its correction right now. The forecasters believe that this is a good price because they believe that Hood is going to reach $130 this year. There are 21 analysts looking at this, but 7 say, yeah, it's going to reach the 130, but we believe a whole bunch of people will sell, and it's going to go down to 94. And there are 5 analysts that say, hey, we think it's going to go way past 94, down all the way to $32. It's going to lose all its money because that's what it's done before it goes back up. So we've seen those 2 drops happen on it again, but the analysts believe that the 105.46 is a good price right now on the belief that it's on the way up to 130. So that's the point that we have to chase it up to. So Any gain at or before 130, that's above the 105.46 on this, is good. But when it starts getting closer to that 130 point or even that 120 point, really start looking at it, because a bunch of people typically cash out, which it's okay to do, because you could cash out, let that price drop even all the way down to 32 and get back in again at a lower price. So that's my personal opinion on Robinhood. Tanya Lockwood asks, what do you think about one stock? I'm going to pin your comment. Okay, I hope that so one is One Power Company, Tanya, that you're asking about. So the IPO information is not available because one was planning to go public, but they have not gone public as of yet. And typically when a company does not go public, it has not met or doesn't feel confident about its financial benchmark. So it's just showing that they're pending and that they withdrew their IPO on May the 9th of this year. So it does not look like they're going public this year, if this is a stock that you're referring to, one. So they may not have met their financial benchmarks. So there's nothing to say what will happen with it. It was predicted that it would open at $13.98. And if it opened, it could go all the way up to $113.44 within 1 year. But again, they're not even open yet. So if you're asking about ONE, they're not public yet. And they may not be. They withdrew their IPO request in May. How about Google? Well, Google, Alphabet does not pay dividends, but there are ETFs that invest in it. But we will take a look at Google and see what's happening with them. So Google Alphabet is currently at $195.32. Okay, and they only started paying dividends about a year ago. They've only made 4 dividend payments on this. The dividend yield is at 0.43%, but there's no dividend growth that they can track in the year yet. So there's not enough information to judge how it's going to perform as a dividend stock. So we look at the history and we see that shareholders over time to judge how it's going to perform as a dividend stock. So we look at the history and we see that shareholders over time, before this became profitable, have made at least 2% per year on the price of this stock. Over time, before this became profitable, have made at least 2% per year on the price of this stock. And that's being conservative. Now that they're paying dividends, we don't have enough data to go on, so we have to go on their before dividend time, which was when they opened at $27 when they were. So it took from 2014 to 2021 to reach that price. They're making me draw puzzles, so just one moment. TikTok was just verifying if I was still on, is all. So we're at 2021, they're at 145, 146 per share. A bunch of people cash out. Those who held on, good job. Because in 2023, it went from $93 all the way up to 2024, 173. Bunch of people cashed out. Went from 162 to 2025, January 190, a bunch of people cashed out. So it went down. Now it's on its last cash out leg. The most recent one was April, when it was at 155. So from April it went to from 155 and gained about $40 to where it is now at the 195.32. So what this company pretty much says is, for every drop, you can expect about a $20 or $40 profit if you hold on, based upon the price history. In terms of where it's going and what's happening to it, conservatively, they're saying now that they're giving out dividends, it's only been a year, and they're expecting there to be only a price appreciation of 0.62% per year with that dividend. So they're saying that they don't have enough data, but they're hoping with their AI enhancements and everything that they're able to make a good judgment on it. What do our forecasters say on it? Our forecasters say that the 195.32 is a fair price because they believe that the stock is going to reach $213 in the next 52 weeks. So that's what they're saying. If it drops low, it's not going to get any lower than 180. Okay, and if it goes past the 195, past the 213, if it's going past 213, there's a good chance it might reach 240 is what they're saying by that price. So I hope I was able to help you get started on your Google research there. So Ultra Zombie says, I wouldn't buy UPS. It's so expensive to run the company. Trucks, airplanes, not my thing. Well, you know, there's UPS, there's FedEx, and the U.S. Postal Service, DHL. There's all kinds of different carriers, and gas prices have been up a while now, and UPS as a company has laid off a lot of management. Like Robert shared with me, they're getting ready to lay him off too. And he's been with the company for about, he's saying 45 years. So basically, I mean, I agree with you on that consensus. However, as a dividend investor, when we look at UPS, when they've been through these crises before, it has not stopped them. When we look at the price history and we look at them as a company, they have not ever stopped paying on a dividend for 52 years. Okay, they've never stopped. And what this company is doing is a little bit different. Their dividend yield is, I'm not defending them, I'm just explaining here that they're paying 7.56% on $86. The bank will only pay you 1.2%. To have a quarterly dividend at that fixed dividend yield that is higher than the bank is still not a bad investment, and to still have a little bit of growth in that price. So based upon their numbers and their financials to run it, they're still able to reliably pay their shareholders, is my point, Ultra Zombie. So that's the perspective we look at as a dividend investor currently. So PGY, I wish Music Spot, that's an interesting font that you're using. I like that. PGY. Okay. Let's take a look at PGY. So PGY is Pagaya Technologies, PGY, ticker symbol. They're up 52 cents at the end of the trading day. This company does not pay dividends, so it's completely based upon the price of the share. So currently, there are only 9 analysts looking at this stock, and they're saying that the $32.73 is a good buy for the price, because they were only expecting it to reach $28 per share. So they're feeling, there are 3 analysts that believe that now that this price is going to drop from where it is and eventually get down to $13 per share. But there are 7 analysts that believe that this is going to go up another $10 to $42. And those are the ones that are saying that this price is a good buy because it's still a little ways from $42 and it's surpassed our expectations currently. So there's only a couple of naysayers that are saying that it may drop to 13. So I hope that helps you on your research. Okay, let's see what else we're going through. I see some dialogue down here. I made good upside, bought in at $53.50 and it's at 57 something. I think it has an upside of 65.
Yeah. Yes, sir.
I'm getting a little toddler that wants her socks up. Sorry. That comes first. But let's take a look at O and see what's going on. We have O is a dividend investor favorite because a lot of dividend investors hold this REIT, R-E-I-T, in their IRAs, and they're saving it to retire. So they're saying right now, we looked at O last week and it was at the yield, almost at the yield price. Now it is at this current price point of $57.20, because there are analysts that believe that this is going to drop back down to 54, then go up to 60. That's why there's a lot of iffiness going around with it, but there are a lot of diehard investors that still buy this, which is fine. Ideally, they had thought if the economy was going to be good, The real estate property that O holds may be subject to some losses with the recent economic decisions that are here. So we won't know that until September. So right now the analysts are skittish on buying O until we have more information in September with more economic reports. But if the economic reports are good in September, they expect O to get up to $68 per share. If the economic reports aren't so good, then it could revolve around where it is right now. But some analysts say it could drop down to $54 per share on this. So O pretty much has never missed a dividend payment over 21 years and has always paid out around 5.64%. So that's $3.23 on the 5720. They divide that payment into 12. They recently just made a payment on August the 1st of 26 cents, and that's pretty much what it is. The history on O is that every year you hold it, you should be able to sell it for every year that 3% dividend growth on the price. So it should be 5.64%, but this year they're not sure. It's going to depend upon the September reports coming up on it. So I hope I didn't confuse you more, JS Cloud. It's more of a wait, watch, and see as to currently what it is. But I'm glad that you bought in at $53, and I hope it doesn't drop to that $53 price again. But if it does, history says to hold on, because this fund has been around for 21 years and doesn't plan on going anywhere based upon its holding. So Jay says that he's hoping VU will split. Well, I hope VU splits too. But VU is another dividend investor favorite that dividend investors look at. So VU is the Vanguard ETF that's at currently $577.35. I see why you'd like it to split. So the way how this works is it pays out that $6.93 per year on the 577, and it last paid out a dividend. They announced it in June. They pay out every 3 months. So in September, at the end of September, they should be getting ready to pay another one. And those payments, we'll take a look. They look like $1.74 a piece. So the way how this works is you hold VU for a year or more. You should be able to sell it back at a 4.7% yield plus the 1.2% yield is why it works that way. And if you could please excuse me for a moment, I have to attend to send toddler who is about to fall in the hallway with her socks on. I'll be back in 2 minutes. Okay, in the hallway with her socks on. I'll be back in 2 minutes. Okay, don't fall. I'm coming. Don't fall. Back. Sorry about the interruption and the wait there. So I hope I explained how VU works, which is pretty much every year you hold it, there should be an extra 4.7% profit. And the only thing is with the split, I don't know if that would maintain the dividend growth price or not. So we'll wait, watch, and see on that. Noble asks thoughts on AVGO. We'll pin your comment. So AVGO is Broadcom, a telecom stock. They're up to $292.93. They're down $4.79 at the end of the investing day. So pretty sad on the losses. They have been They've been paying dividends for 15 years. The dividend yield is currently at 0.79%. Why? They're saying that every year you hold their stock, their price should go up by 13%. So it's really 13.79. But let's see what the forecast says on this as well. So they're saying the 290, 293 is a very good buy because they're expecting this stock to go up to 340 this particular year. And it's already surpassed the expectations of passing 279 where they thought it would go. And they think it's just going to keep going up to 340 at the end of the year. So there are 4 analysts that believe that a bunch of people are going to start selling when it reaches closer to that 340, and it's going to drop down to 190. But we've seen enough. Let's take a look at the price history if it's happened before. So we have to get all the way to the end here where the company is performing, and they have gone up over the years. But the last time they hit 233, February of this year, then it dropped. A bunch of people did sell. It dropped down to 181. And then this is the price it has risen to from 181. So it's raised $100 up to 292. So it has shown a history of doing that. So if a bunch of people start selling at 300 and they write it down, they have 2 points in history where they've shown that that stock price is going to go up within that year or by the next year. So we take a look at that price history on that stock to see what happened as an example on it. Okay. We asked about AVGO. I didn't want to. Don't sleep on O. Well, yeah, JS Cloud. I mean, there's O will correct itself. I mean, the interesting thing about O is no matter at what point people have invested in, they've made money. It's just how much money and how quickly. You know, it's a sad thing that it's dependent upon its property holdings and its profile, but that's how it's structured. But at least it's a good 5% to make over the bank. It's like buying a CD right now. So Jake Bugs asked thoughts on Boeing. When is a good time to get out? Okay, let's pin your comment and let's see what's happening with Boeing. Let's see what we can learn in the facts. So Boeing is BA as the ticker symbol. Their price is currently $224.86. So they were up by $2.52 by the end of the trading day. Yesterday, they were up by 14 cents. Just to give you a super quick history on Boeing, it started off as a white paper stock in 1962. It was 60 cents per share. So it started making money as a stock. Now, remember, I said 1962, 60 cents per share. It didn't start making money until 1996, that many years later. So then it became $49 per share. Then a bunch of people sold. Then it went up to $67 per share in 2008. A bunch of people sold. Then it went up to $55 and it started trading sideways, and it went up in 2014 to $123. Okay, bunch of people traded it sideways, sold it. Then it went to $149. Then it went all the way up from $149 to $320 per share in 2018. Guess what a bunch of people did? They sold. They sold it all the way down to here. So we got it down to $143. Now, since then, it's been up and sideways, up and sideways. It's never really come back to that $300 per share. So right now it's at $224.86. Okay, it's on its way up. What does our forecasters have to say about this? Well, they're saying, the forecasters say that it's a good price, and they expect it to go up no higher than $240 before it starts going down and dropping to $140. So they're recommending that based upon the current price, get it as close to $240 as possible within the next 52 weeks. It may have some ups and downs. And then right when it's at that 240, there are 3 analysts that say that it could go from 240 to 252. There's one analyst that says it could go to 280. But I say, let's split the difference. Let's watch for it to get to 240. And that would be, looking at the price history, the recommended point. If we compare all the analyst reports and the price history, 240 would be right at the point before, a bunch of people sell and drop out of it. So this company has been notorious in terms of a whole bunch of people buying it when the price is low. And as usual, that price gets up and then a bunch of people sell and it drops. And that's a good time to sell because you could buy in at a bargain when it drops and ride it on up again and make money. There are people that have rinsed and repeated that process with this company at least 3 or 4 times. So it's definitely okay to watch for that with this. This is just one of those companies that get used and abused, unfortunately. Okay, and then I was asked, what are my thoughts are on Ion NQ? I'm not sure if I looked at that company already or something. Ion Q Incorporated is $42 per share. It's up by $2.16 at the end of the trading day. So they're saying, the analysts are saying, there's 8 of them that have only looked at this, and they're saying it's a good price because they believe it's at $42 right now, which is a good price, and it's going to get up to $45 is what they're saying. So it'll grow $3 more. From that point, if it surpasses $45, it could go up to $70. Now, we always have those 2 negative analysts, or that 1 negative analyst. In this case, it's 2 that says, well, it's going to go up to $45, and then it's going to drop back down to $30. That's the 2 analysts that say that. So they always have somebody predicting the opposite side of things. But the anticipation is because it's close to $45, it could go up to $70, is what the analysts are saying. So that's why they're saying IonQ is at a good price right now. SVOL. Okay, let's look at SVOL. So Simplify Volatility Premium, this is an ETF, and the ETF has holdings that are government bonds, pretty much, and looking at their holdings, it looks like they have government bonds to hold equity because they're involved in the trading options of volatile things that are deemed as volatile is basically what it is. So the history on this stock is that they've always tried to maintain even, but it's dropped a little bit because it was $26 per share in 2021, and it went down in 2022 to 23, and then it's to 21. So it's always periodically gone down $4 or $5 per year is what it's looking at. So it's sideways and down. Let me take you to the end here. Sideways where, it was at in February, $21 per share. So here it is from $21 in February, dropped down to $16.75. So always a little sideways and a little down. So my only concern about it is that even though it's paying the dividend yield is very high at 20%. Why? Because when you buy in at $16.75, the chances are very high that you're going to lose money, and it's going to be cheaper than $16.75 when you get ready to sell it. As a matter of fact, it says that it loses 6% in price per year because it's always sideways for a little bit before it goes down. So the price is always around similar, even Steven, then it drops. Then it drops. So even though it was paying out monthly, and they say it was, and they say that the next dividend date that they're announcing is July the 28th, which they've just announced and paid, but they haven't announced one past that July 28th date. So I don't know what they're going to do next month, and if we can expect them to pay next month. They haven't reported that in yet. So my turn off about it is the fact that the price is dropping every time it pays out. Uber. Uber. So Uber does not pay a dividend. It's a common stock, but it's at $89.39, and it was up 96 cents at the end of today's trading day. So we look at the forecast on it, and the forecasters say, well, it's going to go up to $101 this year. And if it passes $101, it could go up to $120 per share. We always have the 2 or 3 negative forecasters. Well, there's 32 analysts, and out of the 32, 3 has said that it's going to drop from 89.39 down to 74. But overall, more of the analysts agree that this is a good price to get in on it now. They're rating it as a good buy because at least on that 89.39, it could go up to 101 is what they're saying on it. And Jake Bugs, I thought that I had announced on Boeing when was a good time to get out. I thought that I had already answered that question, but in case anyone missed it, when the Boeing, let me get back to my refresher so I can remember what I said too. BA is the ticker symbol for Boeing. So right now it's at 224.86, and I said, but wait till it gets closer to 240 to look at the analysis, to look to get out, because the highest it's expected to be is at 252 this year. But just to be on the safe side, look at how it's performing at or just at about 240 and make your decision at that point in time based upon the price history and the performance and the statistics on it up to that point. COUR. User asked about COUR. Let's take a look at COUR, which is Coursera. We know what Coursera is, the course group. So it's at $12.18 per share. Here's the thing about the online courses, okay? And it's something that one of my interns turned me on to. I have 2 summer interns, and they're saying that most people are just getting on ChatGPT and doing their free courses. That's not what we're doing with the free dividend course. The free dividend course is 3 years of my notes that my interns have broken down into 5-6 easy lessons. But most people are creating these courses using GPT, and therefore it's devaluing the existing courses that are out there. So the courses are at $12.18, and they're blaming AI technology on the fact that course type programs are being devalued. So Udemy especially, in school. So this stock for Coursera is down to $12.18, and they're saying caution on it because they didn't believe it would get higher past $12. Okay, they believe that this is going to drop down to $7.25. So that's based upon the analysis of 15 analysts on this particular stock. Hunter asks, could you analyze NVDA? So I know that they've been talking about NVIDIA in the news a lot, and there have been lots of mixed and conflicting things being said, but we're just going to report from the facts and from the analysis. So NVIDIA is at $178.26 per share. It was down $1.74 per share. It could go down even more because the tariffs on the tech stocks have not been announced yet, and they can get up to, like the pharmaceutical stock, up to 250% tariff taxed is what they're saying. But that news is not out yet. So all the other tariffs have been announced but that. So right now investors are trying to rally this up. So they're thinking that this is going to get up to $179. If it passes $179, it could go as high as $250. But depending upon the tariffs, if the tariffs are really high, then this stock could drop all the way down to $100 a share, is what they're saying. If, tariffs are manageable on this particular company, then it's going to revolve around 179 to 250 over 52 weeks, is what they're saying on NVIDIA. Can you do TGT stock, please, and let us know if you would buy it now? Thank you. Okay, well, let's look at our facts on TGT. And then if I have a personal opinion on buying it or not, then I will. Now, a lot of people are mad. I'm looking at the socials because there are a couple of home renovation influencers that have their brand at Target, and they've announced some surprising news about a thruple about them, not to name the people, but a bunch of people are against shopping at Target because of this. Every time Target has been, when they decided to do the gender neutral bathrooms and, different pride things and everything, they had to back up from that because of the outlash from certain communities that they're the hub in. Because it's interesting, we have a lot of Walmarts, but then we have Targets in communities that are more conservative that have really fought back and bitten into the company's profits. As a result, Target now, if you join Target Circle for free, they're begging people to come into their store. They're giving away so many free things, trying to beg people to come back and shop there. But their stock is currently up $2.64 because they're trying to say now that no matter what tariffs are, they're going to keep prices manageable for people and offer incentives through Target Circle. And they're really pushing for people to enroll in Target Circle. So from a consumer end, that's how some analysts explain the stock growth. Other analysts explain the stock growth by saying that Target is strategizing to have more domestic products and less imported, like Walmart and their other competitors. So the analysts are saying, hey, we think that this stock at 102 is going to go up to 117, but it's growing so quickly, it's almost at a whoa there. It's almost getting close to a point where it may not be profitable to buy it. So I pretty much wouldn't buy it right now, in my opinion, because it's getting close. Even though it's not quite at 117, it's at 102.43, and it's growing kind of fast with their newer announcements in the Target Circle and everything. So I would be kind of cautious, because the fact is that the analysts believe that are looking at this saying that as soon as it grows to 117, yeah, it could pass and go all the way up to 160, but then they believe that a bunch of people will cash out and it'll go down to 90. So with me on this particular stock, I'm going to, especially with the economic reports coming out in September, this is another stock that could drop too. So I'm going to wait until September to make a decision, but I would prefer buying it closer to $90 per share personally, as to where it says it would bottom. And that's my personal opinion from looking at the price history. But if we want to follow the optimistic analysts who believe it's going to get up to 180, 170, they're saying it's a good price point. But most analysts are saying, whoa, don't buy it at this price because it could drop. So that's what that's the mixed opinion consensus. So Philly is asking for NRG. Thank you for the hearts. I appreciate it. So we have NRG, which is energy, ticker symbol NRG. And they're saying, Philly, that this price is a good price to buy it at because it surpassed the expectations. They only thought that NRG was going to be no higher than 160 this year. It's past it. So now they're thinking it's going to go up to $200. So they're saying that this price is a good buy for it right now. So a lot of the analysts are very gung-ho on the energy sector stocks because they have surpassed expectations this quarter and are getting higher. So we'll continue to look at it. Obviously, continue to always check the price histories before making a decision, but currently they're saying it's a good price to buy it at. So now they're saying that the live visibility is restricted because it primarily directs people. We're not directing people off the platform, but this always happens. They always try to do this because we're giving ungated information. We did nothing to direct people away from it. And everything about TikTok is directing people someplace else. So I don't know. It's a very weird rule that they have for live. So we have SOL. MK is asking about. And since our live is restricted, any information you want to know about me, there's questions about my background, it's on my Patreon. So we have SOL, which is the Italian stock. Is that what you wanted to look at? SOL. Or is it the Emerine Group, SOL, that you wanted to look at? That was $1.86 per share. So let me know, MK, and I'll get the right one. We looked at COUR already, user. I hope that you saw that. If you didn't, just let me know a yes or no in comments, because I don't know if I'm getting your comment later after I answered your earlier question. Yeah, we looked at Target already, and I'm using Yahoo Finance, and for information on that and all the websites that I use for free, please look at my videos. The pinned one with the blue screen will give you the link that'll show you everything that you need to know on that. So Spin Hazam asked about CMG, or Spin, I hope I'm pronouncing your name correctly. I'm sorry if I'm not. But CMG, Chipotle, and we're going to be talking about Kava this week too, but Chipotle is a very interesting dividend stock. And right now they're currently saying that they expect it to go up to $60 per share. It's at $42 per share. So they're saying that the $42 per share is a good buy. However, out of the 26 analysts, there are 7 of those analysts that believe that as soon as it hits that higher price of $60 per share, it's going to drop right back down to where it is, because they believe a bunch of people will sell. So, but that's the 7 analysts out of the 26. The rest of them believe it's going to keep on heading past the $60 per share to $70 per share. I am not a personal investor in Chipotle. I'm an investor in Kava. I just recently got Kava stock. But I definitely respect everyone that invests in Chipotle. It is a common stock. It is not a dividend stock, so it's completely based upon the stock price. So to give you an idea of where this is going, in 2006, when they became a white paper stock, it was $1 a share, okay? And it took until 2015 for it to become $14.50 a share. Bunch of people cashed out. And again, in 2020, a bunch of people cashed out when it was $15 a share. Then it went up to $37 a share. Bunch of people cashed out, fought its way up. Then in 2024, it was $62 per share, so $20 down from where it is now. And that's what analysts are talking about. They believe that Chipotle is undervalued because they believe that it really didn't have a chance to come into a price of its own. And it's believing that this year it will. So it's always struggled when it hit that 60. In the past history, in the past 3 years, it has always, a bunch of people always cash out when this thing hits $62 a share or around that amount. So that's what those 7 analysts are warning about. So as soon as it gets closer to that $60 a share, you might want to do the strategy and then buy in again at that lower price and ride it on up. And that's an assumption completely based upon the price history of it. Are you buying United Health? I'm not buying any health stocks this upcoming quarter. I'll be sharing with in my growth tier what I'm buying. And I'll make some public free postings on the Patreon about what I'm buying. But we'll look at United Health together facts. So United Health. So we have United American Healthcare Corp. Did I spell this right? I thought United Health was UNC. UNC. No, that's United Corporation. United Health. Am I not finding things correctly tonight? Because I thought United Health was a health insurance. But if you're asking if I'm buying United Health, no. But they're only showing me on here in choices United Healthcare Products and United American Healthcare Corporation stock, which is an over-the-counter. So if you have a ticker symbol of what you want me to look at, please let me know, because I'm unable to find what I think you're talking about, which is the health insurance. I thought it was UNC. Let me see. United Bankers, United Rentals, United Airlines, United Bank Share, United Homes. I'm just kind of taking a look here because, yeah, they're not giving me, they're giving me the over-the-counter stock, which is what I don't think you want to look at. So let me know what ticker symbol you want to look at, and then I can look at it. But to answer your question, no, I'm not buying United Health because I'm not that heavily invested in the healthcare sector. Boeing CEO is bad. Thank you, Salman, for letting us know that. We appreciate that. And yeah, we look at management decisions when we buy into stock, especially IPOs, or especially if there's a switch in CEOs. We'd like a good CEO over our company that's managing it well. I need another position like MO. Mickey D's, I'm loving it. Yes, well, MO, let's see how Altria is doing, MO. So MO is at $62.52 per share. It's up 58 cents per share. The dividends on MO is 6.53. Now, they are a dividend king because not only do they pay the 6.53% dividend, which is $4 a year on the $62, they're saying for every year you hold the stock, it's a 4% growth. So you definitely, a lot of people like MO. They put it into their IRAs, they put it in their portfolio, and they typically hold the stock 5 years or more because they want to collect that extra 4% per year on the sale price. So it has always offered a good shareholder yield, and shareholders have always been able to not only collect the dividends every 3 months reliably over the past 56 years, but also able to collect a little profit each year on that share price going up. So yeah, people definitely look at that, and you'd want to compare the list out to other dividend kings and other dividend aristocrats that are paying around the same amount that have been paying for the similar amount of years. And you're also looking for that at least 4% growth in price per year. So Solomon is saying Costco is better. Let's take a look at Costco, which I don't know about your local one, but mine, the employees there are making $30 or more per hour, one of the managers had told me. So I know that in certain states it's around $20, $21, but some states it's up to $30 per hour, that they've raised the prices for a lot of the employees because there is a dispute on the cost of living. So they're one of the higher per hour paid wages for staff to work at, but they're currently at $943.63 a share. Costco is down $11.74 this year. Now, the interesting thing is that the dividend growth is 0.55%, but there has been no stock price growth in on this as well. Because the stock price is currently down. It was at $1,042 per share, and it's now down to $943.63. So it's showing that people have lost an average of 12% on their investments with Costco. So it's not showing up as being better, it's just showing up as being down right now. So in terms of the price being down right now, the dividend yield is 0.55%. The bank is 1.2%. So why wouldn't I take that $1,000 and put it in the bank and make more at this point? Because I've got no gain right now on the dividend growth of that stock price. It's not getting any higher than $9.43 right now. It's getting lower. So it's the numbers for Costco aren't showing up the way we'd like it to right now. When it gets up past $1,000 or more per share, then we could start talking about the price increasing per year, but it's not happening right now with them. Okay, let's take a look. And I want to thank Void Echo for sharing the live. I really appreciate that. So UNH Yes, thank you, thank you, thank you for UNH. United Health Group. That's thank you, Special K, for the gifting of the cats, the 5 cats. I appreciate that. But United Health Group is at 251. It's at 1002 up. It's up by $10 at the end of today's day. Yesterday it was up by 2 cents. Today it's up by $10. That's the difference of the news. So United Health has been, as you can see, paying dividends reliably for 15 years. They're saying, yeah, we're giving you the 3.5% dividend yield, which is the $8.84 a year on the 251. They break up that dividend payment every 3 months. So what is that looking like? They last made a dividend payment June the 16th, so they should be getting ready to do another one in September of $2.21 around September the 16th. So they're saying for every year that you hold this, not only do you get the 3.52% dividend that we've reliably paid over 15 years, but expect that increase in price of 9%. So we add the 9% plus the 3.52% dividend yield. So we're looking at a 12% yield per year overall is what we're looking at. So what does this price history tell us? Well, just to give you a little bird's eye view, 1990, this was a white paper stock at 56 cents per share. Okay, so it goes up a little bit to $53 in 2007. Then a bunch of people sell out, goes up and down. So right here we're at 2016 before I get my head out the way and show you something. Okay, what does it do? It goes up, and a bunch of people sell out at different increments, like in 2018, but it continues to go up, and it fights against people that are selling. So let's leave off right here. November of last year, it's at $557.77. So the price has fallen all the way down here. See where it's fallen? All the way down from 557. So forecasters believe that the stock is undervalued, so it should really be priced higher than 557. They believe that by the end of the year, it's going to get up to 405 per share. So that they believe that the 251 price is currently good because they expect this, with the gains that they're seeing, for it to go back to where it was last year or close to it at $405 per year. There are 8 optimistic analysts out of the 23 that say, hey, not only that, it's going to make up for everything that has happened, because this stock should really be at $700 a year based upon its growth, and we believe it's all coming back this year, and it's going to be that way. So we've got 2 schools of thought. One school says it's going to get as high as 400, and one school that says it's going to get up to 700 on United Health is what they're saying. But no, I'm not invested in it, Special K, but I hope this gives you enough information to make some decisions on it. And I see Antoine and Tanya have asked about it as well. So thank you for asking about it. Make some decisions on it, and I see Antoine and Tanya have asked about it as well. So thank you for asking about it. Let's see everything else. Campton, we looked at UPS and we saw that UPS is paying out a little over 7%. I think it's 7.5% on the $86 per share, and they believe that it's going to go up a little bit, but there hasn't been any proof in price of stock growth on it. So whatever the price is at, it's going to be at the dividend yield of 7%. So I hope that gets you started on your research with that stock. And Special K, thank you for you're awesome, the 6 gifts. My interns owe you a lot of gratitude, and thank you. And thank you for the rose, Special K. We appreciate you supporting our lives and helping our interns get a McDonald's breakfast one Wednesday a month. We certainly appreciate that, and we appreciate all the hearts as well. We went over Microsoft earlier, user 9.159, so I'll cover that in detail on my Patreon since it was asked about earlier, and you could read about it again, but pretty much Microsoft stock is going up, was what we looked at it, and we looked at it as being, and it's also being reported as beating its earnings currently as well. So that's what's showing up with it. So we are currently we've been on for about 2.5 hours tonight. So I guess it's time for us to wrap things up on a Tuesday night. I will be back on Thursday at 9 p.m. I'll be posting more updates on the food sector this week and more private reports. So please join my Patreon for all the stock market updates this week. And pretty much most of the stock is showing us that it's really trying, those that are dropping, most of the stock that we've looked at tonight that's been dropping has come back, with the exception of one ETF that's been historically just going sideways and lower. But the rest of them have been going back up. So it's taught us to look at the price history to make a decision if we should panic sell or not. But most of them are showing us multiple instances where we shouldn't, because the stock has come back after dropping. So I have enjoyed my time with you tonight, and I will be back on Thursday night live at 9 p.m. And our free course is being released this Friday. So please join my Patreon, and I thank you for joining me tonight. Have a wonderful night, everybody. And any additional messages that I'm getting, my interns will capture, and I'll answer them in printed form in Patreon in tomorrow's article for free. So please take a look at that. Thank you. Now tip my glasses because I can't see how to end our live. It's not